Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again at euro currency. Well, today we have prepared a bit special weekly report because we're trying to cover all driving factors that have made an impact on the euro currency, on the British pound as well. They were mostly political, so this week mostly was driven by the politics factors, and they make impact on all assets, all markets that we have currently. So it's euro, forex, stock market, gold markets, or everything. And it led us to combine the discussion of all these factors in one report. Although the impact on the different markets was a bit different, so you can see on the euro currency we also have the upward action, but it's a bit different scale compared to the Great British pound. And we see that three major factors stand on the market. First is the next round of the United States-China negotiations. Second is the news on the Brexit. And third, the changes in Fed policy in relation to its balance sheet. So if maybe you do not know, but the Fed in last week stopped the selling of the assets from its balance sheet and turns to the buying of the assets back. So at first they were selling 50 billions monthly. Now they turn to the buying of the 60 billions of the assets from the market. This is something like the quantitative easing program, maybe not at the same scale, but that's definitely the diverse steps. And all these three factors we tried to cover in our weekly report. Especially interesting is the position and view on the Brexit turmoil. So because a lot of optimism, a lot of euphoria right now stands in the market around so-called some positive shifts, but well, I think that it's too early to celebrate the agreement, and that comes from the real problems. So those of you who knows the real problems of the Brexit will not be too hurry with the taking the long-term bullish position on the British pound. We suggest it's mostly emotional reaction, and we have really doubts on the durability of this reaction that we see on the market. But all the stuff you could read in our report. On the technical side, we will take a look at Europe, because on the Great British pound, the overall performance was outstanding. But currently, we have just one white candle pillar on the chart, and we do not see any objects to discuss, because market is coming to the major resistance on the weekly chart, and once it will be hit, that will be the object for discussion. That will be the patterns for discussing, and this will happen within the 1-2 weeks probably. Meantime, we can take a look at the euro currency. So on the euro currency, as you can see, the overall tendency stands as well. Maybe it's not as fast as on the Great British pound. And on Friday, actually, market has completed our best case scenario. So we actually were counted on a bit closer standing targets, but as a result, market was able to hit the OP target. It's around 111 area. So take a look at market. By the end of the week, it's completed this AB equals CD pattern and hits the OP. At the same time, this OP stands slightly below the major resistance cluster. On the daily chart, take a look that we have here is 110.80, 111 or 7 confidence level. Next OP stands slightly higher, 1137. Also, this level is accompanied by the overbought condition. So currently, it is possible that market could try to move slightly higher and hit this area resistance, but more probable is that some reaction on the OP we will have. It's at least some 30% pullback here should happen. Also, you could easily recognize here the godless triple to sell pattern. So this initial swing and ABCD retracement. So that is godless triple to sell. This pattern suggests 30% pullback. So that's why our primary scenario on the beginning of the week is a retracement down. At the same time, guys, we keep an eye on the possible large bullish reversal pattern, which is the hand and shoulders. So take a look, that could become left shoulder ahead. This market will hit this area, as I said, it's 11.1086, 111. This will be where the confidence daily stands. This will be the neckline as well. Market up, down from here could start to form right arm. But it's also possible that right arm will start forming right from this point as well. So although the upward continuation right to this level is less probable, but still it is possible. And if this will happen, the potential of this upward action will be for 30, 40 pips maybe right to this level. So to understand what particular scenario market is choosing, as you can see on the hourly chart. So here, once market has hit the OP, this potential situation for direct head and shoulders pattern. So from that standpoint, if market will form this ABCD pattern, it will complete the target of the daily 222 sell pattern. So that because ABCD possible action by the head and shoulders will reach precisely the 30% support of the whole upward action. That's particularly the target of the 222 pattern. Take a look at this confidence support is accompanied by the relatively strong support cluster. We have the previous consolidation, which also provide the support, and take a look at two pivot lines. So this is pivot support 1 weekly, pivot support 1, and monthly pivot point. So that's an area where potentially retracement could stop. But that will happen only if market will start to form this pattern. So if you're a scalp trader, you're watching for a opportunity to take the position, some trade on the intraday charts, that's the pattern that you could keep an eye on. Your entry point should be somewhere around 1036 when the market will start to form right arm. If somehow market will follow to the upward action, taking out of this top, that probably will happen very soon. So we should get the clarity relatively soon on Monday, because take a look here, we also have a kind of the pennant. And if market will break it up, taking out of this top, it means in this case that no hand shoulders will be formed. The market directly is coming to this resistance, and major retracement will start right from this area. That's second scenario, which we think is less probable right on Monday, but still it could happen. So that being said, it's two major scenarios that we will follow. For our setup on a daily chart, we should do nothing because on a daily context is bullish. We do not have any reasons to go short, and we need to wait for setups that could let us to take the long position. That could happen either around 109.80 area, if market will complete this ABCD, or at major retracement if market first will continue upward action here and then starts retracement. Scalp traders could watch for bearish setups as well, and one of them is the reverse head and shoulders pattern on the intraday chart. So you can see mostly the common week is promised to be tactical because we do not have some major breakouts or something of that sort. We are working with the tendency that we have on a daily chart. And currently it has not really big pace, not really fast, and we need just to get a good entry point to follow this tendency. More interesting situation will become as soon as market will form reverse head and shoulders pattern, if of course it will happen at all. That's promised to be more interesting situation. But while we're coming to the neckline and forming tactical minor retracement, well, the overall scale of the trading will not be too extended. Also, it's interesting to see how fundamental background will change in the nearest time, because definitely the Fed steps should make impact on the United States dollar relatively soon, and it could be a very important moment, the Fed meeting by the end of October.